Morning, good morning. Happy Tuesday. It's Taco Tuesday, and we are back with the live sessions. I haven't done videos in a while because I've just been in sync with just trading SPX and just trading price. I didn't think that a video was needed for the time being because I was so focused and locked in, just trying to balance where, okay, study every night versus don't study and just go off of the levels you have. Prep your levels for the day and go on from there. So, as you guys all know, in regards to SPX, that is one of my top tickers. I trade that every single day. I went from trading it all day to literally trading it twice to three times max a day. Basically, mornings, lunchtime, and closing. Last hour. It's always an hour to down to the last 5 minutes. It's where it gets volatile, That 2:45 to 3 o'clock, 3 p.m. gets very interesting. So basically, I'm gonna just dive into this. We're looking at the 4D chart of XPX here. Pretty simple. 14 SMA versus 30 SMA. 14 is your blue dotted line. Yeah, 30 SMA is your yellow dotted line. As you can see, super basic. First and foremost, I always tell people support resistance. We'll get those fibs in there, the extensions and retracements in there, but we're going to go straight off of support and resistance. The most previous significant resistance until we had a nice pullback was in 2022, all into 2023. Okay, so we're going to use that. Bring this all the way over here. Just make sure everything lines up. You can add the wicks if you like. You don't have to. Then we're going to go into another point where we're going to go closer to what's going on now because you want to just mark all the key points. You don't want to make too many lines. Now you want to focus on your trend lines here. You got your support and resistances. Whatever time frame you like to use that time frame, right? So I'm going to create a trend line. I'm going to use 2020 low. Then I'm going to connect that to 2022 low as well, all the way into 2023 low. So just pay attention to these, okay? This is a very important line here, okay? This trend line is very important. We're gonna mark every single test, okay? Just make sure my arrows are on point. Perfect. Another one. I mean, you don't even have to even do these arrows, okay? Let me get rid of this one. Another thing that I like to do, I like to simplify everything so it's not too much going on in a chart. So you see these vertical lines. I'm going to do a vertical line from that 2020 low. It's yellow, marks it. I'm going to do that 2022 low as well. Mark that. We're going to do, what's this? We're going to really, it's every point from that trend line. So this is 2023. It's not actually the low because the low 2023 was actually in March. Something like, yeah, 2020 was in March or possibly the beginning of the year. So we're going to mark that secondary low, okay, on that pullback, basically where the trend line went off. Okay, so based off this alone, that next pullback, we have to get some type of slope. Has to be some type of slope where when price goes straight up, it starts to form a slope, or it just has that quick decline. So off that rejection from its highs. So let's go into that. So I basically drew my basics. So this is our 4D. The 4D started 620. Today's the 25th, so we got a new 4D starting today. Actually, give me 1 second. The next 4D actually hit tomorrow. This 4D closes today, so it's going to be very interesting. I'm not even looking at ES. I have not traded using ES in a long time. I just been trading SPX, watching levels. I don't watch SPY. I don't watch QQ. I do look at NQ every morning to see if it's up or down, depending on how many points. 30 to 70 points. I look between that. 30 is not significant. 70 is right in the middle. 100 is significant to me. 100 points overnight or 130, 100 to 130. I go for those things. Those things is what I look at. Oh, also the fact that I actually mark these vertical lines. I'm going to actually mark tops too. So let's duplicate that. We're going to make that color. I'm going to change that color. Make it my favorite color, purple. Then we're going to duplicate that. The tops before rejections into these trend lines. Another one here. And then let's just say for now, where we are right now. Okay. Boom. We'll just use this for now. This is just a temporary top. I'm not saying it's a significant one. You have people that would find so many ways to draw trend lines. I find drawing trend lines at it has to make sense. You just don't want to just draw lines to be like, oh, okay, yeah. I see why, because this trend line. No, this is a nice trend line here, which I want to change this color to red. Excuse me. Because these were all rejection points before finding that support 2023. Also that trend line bounce here. And then into 7/14 of 2023, another pullback back into this trend line again. This rising trend line in October. And we just took off there. Some people would be like, okay, I'm going to put a trend line here. You can do that as well. But then if you're going to do that, at least stretch your chart out, make it look cleaner. Because I feel like when people have their charts like this, it doesn't look clean. It's not clean. Okay. So regards to XPX 4D, today is the last day. So I want to make this super simple. Okay. So we're going to actually zoom in, get rid of that trend line that I just created. We're going to use 54.96 as a temporary top, but we do not know if this is the top for now. It could be a short-term top, be a long-term top, depending on how long. But all I do know is you got to look at the key factors. One key factor, 14 SMA and 30 SMA. The last time we tested the 30 SMA was April. Created a box, went inside, double inside up and out. And then we bounced off that 14, creating a hammer in May of the 29th. And then we got up here, 614, now it's 620 candle. Now what I do here is I make it as simple as possible. I'm going to start marking the previous 4D candle closing body here below 54.23.93. Okay, so that is going to somewhat correspond to the previous candle as well, where it closed at. That previous candle closed at 54.33, right? Let me just make sure. Yep, 54.33. This one opened at 54.24. So, okay. So somewhere in between there, we're going to mark. You can actually do two lines if you want. I'm going to duplicate that. There you go. Now from there, we're going to go straight to the daily. We're not even going to go in between 3-day, 2-day. We're just going to go into the 1-day, the daily. Now, when you go into the daily, you're going to just see everything you need to see. Inverted hammer. Now, this can get tricky. But rule of thumb for me is always 14 and 30 SMA, depending how extended out we are with price, plus the factoring that resistant point, hitting a resistance, right? And then it's like, where does that resistance come from? I mean, there's so many ways to find resistance. The fastest and most reliable, my point, is Fibonacci extensions. depending on, you can use your standard extension, you can tweak it to whatever makes sense to you. You know, I've played with this for years. I have not tweaked it in a long time until market changes again. Market has not changed. So here you go. Simple. Now, those lines that I created, those two supports that I created that we had based off the 40, I'm going to actually remove those because this found the it found the middle point. I'm doing everything slow because I feel like you're going to go over this video and you're going to see, okay, wow, that makes sense. And that 54.96 was just a mark point. That was basically the top of the body of the 4D candle, this 520 4D candle. Okay. Yesterday, told the team targeting 54.40 as a strike price. The target would be the 14 SMA. 14 SMA is always that first vacuum point. Because usually after a bottom, when the 1430 crosses, which is the 14 crosses above the 30, I'm going to mark that point for you guys. I'm going to use an arrow here. This is a cross. When that happens, price is bullish as long as price stays above. Okay, so I'm going to use this 14 SMA. I'm going to use this 50, 59, 51, 77 level, right? But I'm actually going to go to the most recent pullback within the 14 SMA. So that would be here, 5,009. So let's do that. It's funny, it's just remembering 5,000. You didn't think like it was like, all right, we're gonna top at 5,000. Nope, didn't top at 5,000. Broke that, pulled back under it, and just took off from there. Like I said, I remove lines as we go. So we're gonna use the support here, right? This was that secondary pullback before price just took off, and it topped out here shortly, 53.43. Then we pulled back into the 30 SMA. Now this is gonna make things more interesting. So remember that level that I showed you, that resistance, it was 54.96. The actual level, we're gonna remove that now that we found it. Because usually people are like, oh, yeah, your freaking levels are always on point. How are they so on point? Because I focus on the first and most important technical, and that's support and resistance. Because literally, fib extensions, fib retracements, Fibonacci arcs, fans, all of that doesn't even have to be Fibonacci. Whatever it is, you have your VWAPs that I use, calendar points that I use. It's no secret. I love calendar points. I don't even show that on my charts. That's something that's a breakdown that it's just more in depth. I add it to my charts when I'm missing something. But right now I'm not missing anything. It's very simple and basic. So we have an extension within an extension. We have a long-term extension versus a short-term extension. Short-term extensions usually happen within that 1430 SMA test. We test again after the cross, which we marked, which I'm actually going to duplicate this arrow again. I'll duplicate, there we go. Oh, there's 3 arrows there. Should have just deleted, I just removed one. So here, we started that from here, this low, to this arrow, and then we're gonna let's just mark it. Oops, all right. Activate arrow 3. We're gonna just turn this arrow upside down. Just keep paying attention because these are, then I'm gonna make another video again in regards to the proper way to using Fibonacci extensions. I'm gonna open up some things that people don't even understand. I'm gonna be honest, who really got me into Fibonacci extensions, and not just from it's not even from conversation. I was watching his post, Jan Vala, John, shout out to him. This was years ago. We both were ones that we started the whole $500 challenge. We started that. We brought that into light on Twitter, on X. And I remember asking a question. I'm like, can you use Fibonacci with Fibonacci retracement with extensions? He's like, I'm sure you can. And I started playing with it. I'm like, okay, a Fibonacci extension. Extensions is basically for finding resistance points. retracements is for finding supports. So I'm like, okay, put them together. They go hand in hand, tweak it to make it make sense. So, all right, you know what? Let me draw my support and resistances. So I did that. As I showed you when we started this video, support and resistances were put up. After that, I started adding extension. And when you see when I added my extension, it was not off of my support and my resistance. It was very close. Okay, so now that we topped out somewhere around 5,500, right, and 30. So our key point here, so you can see these two extensions. What stands out here the most? I mean, they're overlapping. So I'm actually going to hide a curve. I'm going to hide the extension 2 curve. Okay, boom. Now we got 54, 30, 77. Look at that 14 SMA rising, 54,008, right? So in between here, somewhere in between here, we're testing that 54.30. So for me, I always love gap ups. Gap ups on a daily, the best, especially if we are in a short-term top. Same thing for a short-term bottom and a gap down, where we're trending down, but we're kind of flagging in a sense, or falling wedge, you can say. That's another thing. So this is SPX here. I'm going to show you. Now we're going to bring this down into the 4 hour. We got to always go into that 4 hour. As you can see, look at this. As you go down in time frames, not up, which bigger time frames, shorter time frames. The shorter the time frames, the better. You can see everything. We had a gap here, 53.97. Yesterday, it was, we break that 54, 57, 14 SMA level here, stay under it. I would love a retest at 54, 57. One retest, somewhere closer to it. And I want to see a rejection. Right back down into 54.30. Keeping it simple as possible. Targeting the fact that let's mark that. We always got to mark our points. Because once you change the chart, the time frame, what happens? Let's just mark this blue. We change the time frame. And we're gonna know, you can also mark it as, okay, that's gonna be the 14 SMA on the 4 hour. You can put that in your notes. But if you see this is a 2 hour, right? Even shorter time frame, that cut in half. That's also the 30 SMA. So 14 and 30 are looking to cross here. We're getting something similar to, what is this date? This is 5/23. So May 23rd. Starting to pinch, price started coming down. It might find that support at 54.30, bounce and recover, or it might come down to close this gap. We have this gap here. Let's duplicate this. I definitely have to change the color because we don't want that color to get confused. So this is gonna, we're gonna have a color for gaps is gonna be yellow. It's gonna be gray. I mean, it's gonna be yellow. There we go. So that's a gap. So we're looking for a 54, 56.30 retest. And then from there, that's when we're going to strike. If it doesn't happen, you can start with a build. By building is you're building the position. So that's a simple breakdown in regards to SPX. It's gonna get interesting. This is why I trade price. I'm bullish and bearish all day. I'm a bull and a bear every single day. There's no, oh, I'm bearish for months or I'm bullish for months. I want to find opportunity on each side so I do not get caught in the crosshairs of, oh, I'm just gonna be bearish for the rest of my life because there's no point of price going up. That's ridiculous. Or I'm gonna be bullish for the rest of my life because there's no point of this market dropping. That's ridiculous. So that's SPX. Now we're gonna roll into ULTA. ULTA. I'm going straight into the monthly. Like, there's nothing better than looking at a monthly, looking at the bigger picture. I had an 8-point move yesterday. Okay. Just this monthly alone, this is one of my favorite setups, depending on how this develops. I mean, it's already developing. As you can see, I got it extension, retracement inside of retracement, but it lines up. I'm gonna actually clear this up. Very simple. There we go. This is just so clean. It's like a similar pattern every single time. always and always, I repeat, mark your ER dates too. Mark those. Because that's usually a heads up to what can come, especially out of support or resistance. So we're gonna mark these again. These are ER dates, right? Bottom of that 371.15. We're doing that again. We are doing that again. So this ER in March had a big pull down, had a, what is this? Monthly closed outside from May. It closed, this is of 2023. Monthly closed outside around October, then went inside up, creating a double bottom. Now we are trying to create another double bottom, or we can call it a quad bottom because we're going to basically use 2023 October low, and then we're going to use November low, and then add May and June low. 14 and 30. 14 is crossing down. Yes. I would love to see a 444.29 retest, somewhere close to that. But we always have to go with the previous candle, and that's May. So May, you want to go over that. So this was a ER point in May. Got a nice spinning top. Next one is supposedly in August. So in August, hence why I chose the 440 calls. Enough time, pretty cheap. I think they're about $2. Just makes sense. Now, if you want to break it down, we can go from monthly straight into weekly. When you look at it this way, it's like, whatever. But you can see this, how this is developing. They're just building this bottoming. This is a bottom. This is building a bottom, but it's a higher low based off that October low. Got a higher low. We got higher lows here. But for this to, I mean, oh my God. Let me just, for those that are 1430 fanatics, like I am, you can already see the 1430 trying to bottom out, targeting that 410. So for me, naturally, I'm buying 410 calls weeks out, 4 weeks minimum. Why? That's enough time, because what we're going to look for is a break in resistance. What's the resistance? Every time we spiked up, but we couldn't close above 395.33. Yesterday, what happened? We tested that, rejected. We mark that, we duplicate this level, and we're going to bring it just below all these candles because there's another point, 381.18. 381.18 breaks, 370s puts are great. So a great hedge would be 370 puts. I want to keep it simple as possible. I don't want to complicate it because people overlook things like, oh, but then you think that this and then that, and but this is it's sloping down or this is sloping up. No, I'm keeping it simple. Look, bottoming. Double bottom here, triple bottom. We can actually mark this as a triple bottom. So look, I marked this, but I actually want to bring that down here. Here we go. Boom. Nice triple bottom. The obvious resistance point, we marked 395.33. We can actually bring that up because there's actually a double top here. I don't really care about this big candle here. Not much significance for me there. Even if I marked it, not much significance, but that's going to be an important level to get above though when we're over 400. I like this chart. You got 1430 testing and nice moves, 30-minute move yesterday, 379 to 394. Nice 30-minute moves. Just keep it as simple as possible. Let's see what the 4D is looking like. 4D is good. We got a inside. Look at that 14 SMA. Beautiful bottoming. Once we get above that, that cross is going to look nice, but we still want that to kind of ease out sideways. It'll get there. But I like that the fact that it's bottoming here. This is buyer's territory here. This breaks, we got to move down to 338 to 297. So this is one that I'm really, really liking. And you can also look at ERs. Moves don't really happen then and there. So I mark these ER points. Now that we actually are on a shorter time frame, let's move these in. So look at that. 4D gapped up. Look at this one. This one is just spiked, but then came back down. Tested that 14. Now we're testing that 14. The main 14 estimated to watch is 398.64, which is the 4D. Another one here. This is a ER date. Everything just happened in that 4D time frame. This one got to move down, possibly following market. Bring this here. Boom. I simplify this as much as I can. Create your own levels. Don't always go off of mines, but use mines as guidance to make sure you're on track, because I know a lot of people do that. This next ER is in August. Depending on how they change it, end of August. I said more than enough time. I like the 470s for December also. But we use significant points. 444 is more than enough. So 440 calls for December actually work as well. You can go September, December. December gives you more than enough time to mess around and trade around that. Right now, NQ is at 77 points. ES is at 789, unless I didn't change my ES. Nope, I have not added my new ES. Give me 1 second. Let me add my new ES. But again, I appreciate you guys for tuning in. And a whole lot more to come. Let's see. ES is 11 points. Not bad. So we're getting a slight gap up on SPX. The gap up that we want. So basically the strength in NQ, right? Change that. Here we go. Bungo. Bingo, bango, bungo. Oh, yeah. And you can see I have not charted NQ because I don't need to. You pay the same tickets over and over. There's no need. It's been doing what it does inside 4D. Nothing spectacular. Here we go. Plus 77 points. I mean, this could be a buy. I'm gonna be honest with you. Gaps filled already. Already filled its gap. Once it gets above that 19,845, it's gonna get interesting. So let me just mark that, because that's gonna be something where it's like, okay, let's get long. Simple. Look, I'm not even using Fibonacci's or anything. Just support, resistance, and trend lines. Stretch this out more so that you have a smoother look, not just to make it what you want it to be. There you go. But again, thank you guys for tuning in, and more videos to come. There's also a gap below 19,400, and in between 19,300. But that's basically where we pointed, not this one here. There's another gap though, but that's on a 2D. But we'll get to that. Thank you guys again. Appreciate you guys.